Hi, I'm Jenny Brown, Sales Director at Mortgages for Business. Today I'm going to be talking to you around the frequently asked questions that we receive from our clients when they're considering using a limited company to purchase buy-to-let properties. There's lots of myths, there's lots of kind of misnomers in the market. So what we're going to do is just go through some of the most frequently asked questions and hopefully put some of your concerns to bed. So first of all, the big question is, why would you consider using a limited company to acquire buy-to-let properties? And the main answer to that, the most traditional reason would be, it's down to tax considerations. So for some people, and not all people, they will find their tax position is going to be more favourable if they use a limited company to acquire their buy-to-lets than buying them in their personal names. Now, at this point, what I would say is that everybody's personal situations, their financial situations are different. So we will always encourage everybody to get professional advice from a tax advisor or a qualified professional who can talk this through with you. But what we do find is for those people who whose gross income, whose total income from all the different sources would push them up above the higher rate tax paying threshold, it tends to be more favourable for these people to use a limited company structure to invest going forwards from a tax position. Now, there are other reasons why people may use a limited company. Inheritance tax planning, estate planning is definitely one of those. Also, moving money from one company to another can be a good way of utilising funds which have built up in a trading company. But like I say, the most popular reason, the very common reason people are using limited companies these days is purely from a tax position. Okay, so we frequently get asked whether using a limited company mortgage would be more expensive than applying for a mortgage in your personal name. So the very short answer to this is that the interest rates do tend to be higher for limited companies. By how much does vary on each person's situation, but I think as a rough guide, I'd say around 1%. Now, there are some caveats to this. So first of all, the interest rate might be more expensive, but in the round, when you consider the tax position, it could overall be more cost effective for you. So just keep that in mind. The other thing I would say is that limited company lending has been around for a really long time. So I've worked at Mortgages for Business for over 15 years. We've been doing limited company lending since I started. And actually, I took a limited company mortgage out myself around 5 years ago. And what's very, very noticeable is that as these mortgages have become more popular since Section 24 was announced, actually there are more lenders lending in that space and the sort of more competition. So the actual margins have come down significantly. So what was potentially a 2.5% increment on pricing to use a limited company has now come down to circa 1%. Which is really, like I say, been driven by competition. The other thing I would say is that some lenders actually don't differentiate between limited companies and individuals. So some lenders have one product set which is available for people and also for limited companies. The market is still on a kind of trajectory with this, but I would say there's a small pricing difference, but it's not significant. So we often get asked what the difference is between a SPV and a trading company. So when you're looking at taking a limited company buy-to-let mortgage, what you'll often hear is the terminology SPV or special purpose vehicle. And I think people get quite confused by this. An SPV, a special purpose vehicle, is quite simply a limited company, and the only thing that company does, its only activity, is renting out property. Now, in the mortgage world, a trading company is a company that does anything else, whether you're a dental surgeon or an IT consultant, it makes no difference. The key point being that you are not simply just renting out property. So from our perspective, an SPV is just a standard limited company that lets out properties, and a trading company is just a standard company that does anything else at all. A concern that people often have when they're looking to complete their mortgages at speed is whether using a limited company will slow down the process for them. And I think, probably in times gone by when limited company lending was quite a new thing to market, then absolutely the process was slightly more cumbersome. But actually these days, we have lenders who can underwrite limited company applications as quickly as they can individual applications. So I really don't think it will hold you back in terms of timeframes. Now, lots of landlords have been really considering their position in regards to their existing properties that they own personally, and they're paying the extra tax that's come about since Section 24, and they're considering moving properties from their personal names into their limited companies. And we're often asked, actually, can I just transfer the properties across? And the very short answer to that is that no, you can't. So if you imagine a limited company is a separate legal entity to yourselves. So what would need to happen is that you would need to essentially sell the property from yourself to the limited company. Now, in terms of how this works in the financing world, what would happen is that a lender would treat the mortgage that facilitates this happening as a purchase. So your limited company would be buying the property from you. You would need to pay fair market value and also any taxes that were applicable, so any capital gains taxes and also the stamp duty as well. Now, when you're setting up a limited company, one of the things you're going to need to do is allocate certain codes to the company, which are known as SIC codes or Standard Industry Classification Codes. And what these codes really do is tell Companies House the activities of your business, so whether you're a mortgage brokerage or a greengrocers. And the same thing applies for limited companies that are going to be renting out properties as well. So essentially what lenders would expect to see if your company is an SPV, so just renting out property, is that you would have the SIC codes 68100 and 68209. And if you looked up these codes, you would see they're very much related to the renting out of property and therefore would denote that your business is a special purpose vehicle. Now, we're often asked by people, actually, well, what are the drawbacks of using a limited company? Obviously, I stand to benefit potentially from, a better tax position, but what are the downsides? So we've already covered off the fact that on occasion the interest rates can be more expensive. So there's no, trying to hide from that fact. That's definitely something to consider. The application process in itself is actually very straightforward. So when you apply for a limited company mortgage, you will find that the kind of questions you're asked are, what's the company name, what's the company number, what's the registered address, and then the application actually moves to asking predominantly about the people who sit behind the company, the directors and the shareholders. So the actual sense of applying for the mortgage is actually very, very similar to when you apply personally. So I think really more the drawbacks from my position would be the ongoing administrative tasks of having a limited company, so having to do company accounts every year and company annual returns as well. Now, what I do for my limited company is I simply just employ an accountant who does this on my behalf, and I find it really straightforward, but there's no escaping the fact that you then have to pay those fees for the accountant to do this for you. The other thing actually as well, just to mention, is that if you have a limited company mortgage, you'll need to have a limited company bank account as well. And one of the things that I found quite surprising was that the charges that come with limited company bank accounts can be higher than you would pay for your own personal bank account. So just something to keep in mind. None of these costs are excessive, but they're certainly one of the downsides of having the limited company. The benefits of using a limited company, very much, as I said, we've referred to numerous times, are going to be connected to your tax position. So this is going to work really, really well for some people. I also feel another benefit of using a limited company can be for estate planning, so potentially bringing in children in later years as maybe minor shareholders can be a really good thing to do. It's worth having a chat with a financial planner, a tax advisor who can really help you with this. But absolutely, a limited company is going to give you more flexibility around this than if you were to own the properties personally. Other pros to look, as we've mentioned already, the sense of applying the application process has become really, really slick in recent years. It's really evolved from where it was maybe 5 years ago, so that's really good. The pricing margins have come right down. In some cases, there's very little difference at all. So that's really, really good. And I think the other reason that people like to use limited companies, which maybe doesn't get talked about quite so often, is that when we're looking at the rental calculation the lenders are using in terms of how much you can borrow per pound of rental income. So essentially, because your tax position is going to be probably more favourable for using a limited company, when the lenders are looking at the rental income you're going to be receiving and trying to ascertain whether the mortgage is affordable, one of the things they are actually doing is also considering other costs. So for example, ongoing running costs of the property, void periods, and also the tax you're going to have to pay as well. So because of this, when lenders are lending to limited companies, you will find they're able to be slightly more generous in terms of how much you can borrow per pound of rental income. Now, everybody's situation is different, and actually every property is different in terms of the metrics that sit around this. So if you did want to have a chat around, actually, if I was buying a property, you know, how much can I borrow personally, how much can I borrow through the limited company, it's worth giving us a call. We're very happy to go through those calculations with you. But in my experience, generally speaking, people can borrow more per pound of rental income if they are using a limited company. I really hope you found that useful. There are many, many questions we get asked. This was just a few of them. And if you have something you would like to discuss with us, we'd absolutely love to hear from you. So you can either give us a call, 0345 345 6788, or you can email us, inquiry@mortgagesforbusiness, or one of our very, very experienced consultants will be delighted to come back and help you out. Alternatively, there's an absolute abundance of information on our website, mortgagesforbusiness.co.uk. Thank you so much for watching.